Assalamualaikum and hello everyone. Today me and my friend will be talk about tax administration for individual in Malaysia. So, without further ado, let's talk about it. So, the main problem in the scenario is the lack of understanding and potential non-compliance with tax regulations among social media influencers in Malaysia specifically. Those who earn more than 3,000 ringgit monthly from sponsored content, paid reviews or online businesses. So this will lead to several sub-problems. For example, unpaid tax. Influencers like Miss Hanis may not be aware they need to pay income tax on their earnings, leading to potential underpayment or non-payment as seen with Zaidi's case. Next one is confusion and uncertainty. The complexity of the tax system and lack of clear guidance might create confusion and uncertainty among influencers, hindering compliance. So the next one is monitoring challenges. LHDN face difficulties verifying income information from social media activities, so making it harder to track and enforce tax obligations. Next one is potential penalties. Non-compliance can result in penalties and legal action, impacting both the influencers and the government's revenue collection. Next one is unequal taxations. Influencers not paying tax means lost government funds and an unfair advantage over other taxpayers. This raises concerns about fairness and equity in the tax system, where some sectors might be easier to monitor and collect tax from others. Responsibility of taxpayer. Paying tax is a fundamental responsibility for all citizens in Malaysia. It plays a crucial role in funding public service and infrastructure, ultimately contributing to the nation's development and well-being. There are several key responsibilities of taxpayer. Number one is registering for a taxpayer identification number. Every individual taxable income or business activities must register for a TIN with the Inland Revenue Board (IRB). This unique identifier facilitates tax administrations and ensures accurate tracking of tax obligations. Next one is filing income tax returns. Taxpayers are responsible for filing their income tax returns annually through the self-assessment system SARS. This involves declaring all taxable income, claiming eligible deductions, and calculating the final tax liability. Next one is paying tax on time. Taxes must be paid by the stipulated deadlines to avoid penalties and interest charges. Various payment methods are available, including online platforms and designated bank branches. Next one is maintaining accurate records. Taxpayers must keep detailed records of their income, expenses, and businesses transactions for at least 7 years. These records are crucial for supporting claims and ensuring compliance during audits or investigations. So the next point is notifying the IRB of changes. Any changes in personal details, income sources, or business activities must be promptly reported to the IRB. This includes changes in address, marital status, or new business ventures. Next is cooperating with audits and investigation. If selected for an audit or investigation, taxpayers are obligated to cooperate fully with the IRB by providing requested information and documentation. So I think that's all from me. For now, I will pass it to other members to continue their presentation.
Key features of the self-assessment system includes voluntary disclosure, where taxpayers are expected to voluntarily disclose all sources of income, including earnings from sponsored brand content, paid reviews, and online businesses conducted through social media platforms. Income computation, where taxpayers must accurately compute their total income for the relevant assessment year, considering all sources of income, deductions, and allowances as provided for under the Income Tax Act. Tax liability determination. Once the income has been computed, taxpayers are required to determine their tax liability based on the prevailing tax rates and thresholds set by the IRB. Payment of taxes, where taxpayers are responsible for ensuring timely payment of their taxes either through scheduled installments or lump sum payments depending on the individual circumstances. Filing of tax returns. Taxpayers are required to submit their tax returns, typically Form B or BE, to the IRB by the stipulated deadline, along with any supporting documentation or declarations as required. And finally, audit and enforcement. The IRB may conduct audits and investigations to verify the accuracy and completeness of taxpayers' declarations. Non-compliance with the self-assessment system may result in penalties, fines, or other enforcement actions. Now, I will be talking about the key steps in the self-assessment process for Malaysian taxpayers, which includes registration and filling. Social media users, like all taxpayers, need to get a taxpayer identification number and register with the Inland Revenue Board of Malaysia (LHDN) using the BE form. They must then submit an annual income tax report outlining their earnings for the tax year to meet their tax responsibilities. Next is income declaration. Social media influencers must declare all sources of income like paid content, affiliate marketing, brand partnerships, and more. Keeping detailed records of earnings and expenses is vital for accurate reporting. It's important to track costs such as travel, tools, software, internet fees, and marketing expenses accurately and categorize them correctly. Tax computation is to be followed where tax rules require taxpayers to calculate their taxable income using allowable tax rates and deductions. Business-related expenses like travelling, equipment, and legal costs incurred to generate income may be deductible. The next step is submission and payment. Taxpayers must submit the self-assessment tax returns within the specified deadline. Payment of the calculated tax liability must be made within the designated time frame to avoid penalties and interest. Next is record keeping, where social media influencers must maintain accurate records of income and expenses for at least 7 years, as tax authorities may conduct audits for compliance verification. Finally, tax credits and incentives. Taxpayers should explore available tax credits or incentives applicable to their specific circumstances, including incentives for particular industries or activities.
Okay guys, hi, my name is Mohammed ISMAIL. Today I will present to you all about return and assessment. Return will be divided by 4 parts, which is individual tax return, types of return, filing of return, and due date. Individual tax return in Malaysia, each user is responsible for figuring out their own taxable income and tax due, as well as paying any tax that is still owed. Anyone who owns tax for the year has to figure it out on their own. When they in their tax return, it is considered as a notice of assessment. Next is amendment of tax return under Section 77B. In Malaysia, with effect from year assessment 2009, individual can alter their income tax assessment if they uncover mistake or commission in their initial return. This procedure is called as amendment assessment. Taxpayer nevertheless is permitted to modify their return once only. There are 2 ways to amend your assessment, which is self-amendment and amendment assessment by Inland Revenue Board, which is IRB.
For the next one is offences and penalties. Under Section 112, Subsection 1, provides that if a person fails to furnish a return of income within the time specified in a notice given under Section 77, the Director General may impose a penalty. This refers to the failure of a taxpayer to submit their income tax return by the deadline specified in the notice issued by the Director General. The notice is typically issued to remind taxpayers of their filing obligations and the deadline for submission. The Director General has the authority to impose a penalty on taxpayers who fail to comply with the deadline for filing their income tax returns. So for the second one is providing incorrect information. Under Section 114 provides that if a taxpayer has furnished incorrect information in return, the DGIR may impose a penalty up to 3 times the amount of tax undercharged. The penalty may be higher if the taxpayer has committed fraud, in which case the penalty can be up to 5 times the amount of tax undercharged. In addition to penalties, taxpayers who provide incorrect information may also be required to pay the tax undercharged along with the additional tax, interest, and penalties. The DGIR may also take enforcement action against the taxpayer, including prosecution in court. Number 3 is willfully and intentionally evading tax. Under Section 114, Subsection A, provides that this section specifically deals with the offence of willfully and intentionally evading tax or assisting another person to evade tax. It states that any person who willfully aids, abets, counsels, or procures the commission, of the offence under the income tax shall be deemed to have committed that offence and shall be liable to the same penalties as if he had committed the offence himself. Willful evasion. This refers to the deliberate and intentional act of avoiding the payment of taxes that a person is legally obligated to pay. It includes actions such as hiding income, inflating expenses, or using fraudulent schemes to reduce tax liability. Assisting other in tax evasion. Now, this involves aiding, abetting, or conspiring with other person to evade taxes. This can include preparing false documents, providing false information, or engaging in activities to help someone else evade tax.
Now, moving on to appeals. The first point is rights to appeal. Taxpayers who disagree with an assessment can appeal under Section 99, Subsection 1 of the Act by filling out Form Q, which is Notice of Appeal, with reasons for appeal. Appeals are allowed for assessments including assessment, additional assessment, an advanced assessment from desk audit, or also best judgment assessment for late or no tax return submissions. Form Q must be submitted within specific time frames. The second point is non-application of appeal, in which deemed assessments under Section 90 Subsection 1 and Section 91A cannot be appealed unless the taxpayer disagrees with the treatment outlined in public ruling, known practices, rules, or guidelines of the Director General during the assessment period. This includes private rulings, IRB guidelines, SCIT, and court decisions or any other written evidence. The third point is non-chargeability. For return submissions, if a tax return filed on time shows no taxable income, it is considered a notice to the IRB. Taxpayers can appeal within 30 days for issues regarding public ruling, IRB rules, and practices, but not if the return is late. For individuals, those with no taxable income in a year are not obligated to file a return when starting employment or a sole proprietorship. The fourth point is submitting notice of appeal. Taxpayers need to send 4 copies of Form Q to the IRB for each assessment year, including at least 1 original. The form should detail reasons for disagreement, issues to be resolved, date and amount of tax owed per the assessment notice, and the taxpayer's signature. The fifth point is finality of assessment. If a valid appeal notice isn't submitted within 30 days, the assessment becomes final and conclusive. Taxpayers can request more time from the IRB to gather additional information. The sixth and last point is late appeal procedure. For appeals filed after 30 days, taxpayers can request an extension using Form N in duplicate copies. For extended period, in late appeal cases, taxpayers can submit Form N in duplicate to seek an extension. They must provide valid reasons like unexpected events or difficulty gathering information for the delay. The IRB will assess each case individually to determine the extension period granted. That is all from me. Thank you.
To summarize, the income tax system in Malaysia is integrate and demands taxpayers to perform their obligations, comprehend the self-assessment system, and also follow return and assessment procedures and be considered on the repercussions of non-compliance. Taxpayers may make sure they meet their responsibilities and stay out of trouble by keeping up with the latest tax legislation and remaining informed. That is all from us. Thank you.